Find them on the TSX Venture under the symbol ADV.
Welcome back. As part of our Green Investing Week, we're looking at companies that operate in the renewable energy sector. One publicly traded firm on Goodwood Funds watch list is Boralex. It's an independent power producer with wind, hydroelectric, and thermal operations in Canada, the U.S., and France. Peter Puccetti, Chairman and Chief Investment Officer of Goodwood. Great to have you back.
Thank you.
Let's talk about what it is you like about Boralex, why this company, and is it because it's renewable, or is it because it just has good numbers despite the fact that it's renewable?
It's a little bit of both. There's a very tightly defined universe of Canadian renewable power IPPs, independent power producers, and so you can look at how they're all trading in terms of a valuation range, and Boralex is a clear disconnect, trading at a much lower multiple than that group.
Why is that?
There's a variety of reasons. To put some numbers out there, I think the group averages roughly 12 times this year's enterprise value divided by EBITDA, whereas Boralex is sort of in the 8 and change range. One of the reasons is it doesn't pay a dividend. And the typical model, certainly in Canada, has been you pay a dividend, and it's a good way to capitalize in the market your 20 to 40-year power purchase agreements. The market gives you a very high valuation when you pay a dividend.
Right.
Boralex has chosen to keep all of its free cash flow and reinvest it in a very significant pipeline of opportunities. Another reason is Boralex historically had some non-PPA contracted business, wood residue burning businesses in the Northeast U.S. that's called merchant power, much more volatile, unpredictable, and so the market puts a lower valuation multiple on that.
So just break down what it does in terms of power producing. Is it all renewable? Is it a combination of...
It's a mix. There's hydro, there's wind. Increasingly, it's wind-driven.
Yeah.
It includes a small amount of solar. It includes the wood residue business and also some natural gas. But as you look forward, post the merger with the Boralex Income Fund, this is more and more of a wind play, and it's in various countries and provinces. It's going to be larger and larger in Ontario. It's got a pretty significant business in France, and it's got a very significant business in Quebec.
Now, it's actually a power producer. If you're looking at these spaces, how much of the profit or even the sales that these companies can generate is based on government contracts, things that can change, policies that may not be fixed in stone?
A very, very large portion. I mean, the entire industry, whether you're talking about European IPPs, renewable IPPs, or Canadian ones, are dependent on some sort of power purchase agreement. Wind is not as egregious in terms of an inflated price versus the grid price in most jurisdictions as solar might be.
Yeah.
So wind has been a much larger component of most jurisdictions' renewable power mix.
Are there places that are better than others? I mean, we know, for instance, in Ontario, that the feed-in tariff program may go away if the government changes in Ontario. Is the U.S., it's been hinted that the U.S. is actually a little bit more stable about the way it's approaching these things. Is that true?
I think you're hard-pressed to use the word stable in pretty much any jurisdiction in this case, because it very much is political winds. And it depends on the jurisdiction again. I mean, solar, for example, some forms of solar, what you would call solar thermal, for example, are already at grid parity in a place like California.
Yep.
Part of the reason is California has a lot more sunshine, but the other reason is that California has already a very high power rate, electricity rate. So grid parity is more easy to achieve. In that case, and certainly in the case of geothermal in California, you're talking about very competitive rates offered by these alternatives. So they're probably pretty safe. But if you're talking about Ontario and what might happen if there's a change, I mean, clearly the Conservatives, if they win in November, have said that they're going to not award further contracts.
Yeah.
The only good news is they've also said they're not going to try to rip up old ones. So anybody who's already got a FIT contract, a feed-in tariff contract, that should be money good, except for Samsung. The Conservatives have isolated on Samsung.
Them, yeah. Now, would you liken investing in this space to biotech, or what's the comparison to sort of a small space where there's a lot of uncertainty about which technology will prove out?
You know what? To me, it's not a technology-driven risk. It very much is about the financing risk. So we sort of look at it as being kind of a weird hybrid bond on certain jurisdictions. So, yeah. For example, if you have a 20-year contract that emanates from the Ontario Power Authority, that should be valued by the market off of Ontario government bonds, you know, some sort of premium above those bonds.
Right.
And all of these businesses, when you get a 20-year power purchase agreement, it's all about what's the after-tax leveraged equity internal rate of return. And when you do the math, I mean, it's very much like looking at a bond
Right.
that has a maturity 20 years out, except you're not going to get principal back. It's a runoff. So we price it off bonds.
Just quickly, I think we have a list. You put together a list to show us the multiples of some of the others in the space.
Yep.
From that point of view, if it's really more about sort of the financial engineering of the transaction than it is about the technology,
Yep.
I'm looking at Brookfield, Northland Capital. Are there others that you like after Boralex, sort of more than another, or are they roughly the same?
There, you know, the Boralex is a standout in terms of, I mean, yes, it's small cap, but it's a $300 million and change market cap, so it's big enough that we can actually sit here and talk about it.
Yeah.
For sure, you can find some one-off operators that are micro caps, you know, sub $100 million market caps that are trading at even cheaper prices, but then you don't have much of a portfolio. If they mess up on one particular operation, that could be the end of the company. So this is a safer way to play.
Obviously, you own this.
We own a little bit of this. We'd like to go higher, but we're waiting for some clarity from the Lemaire family that effectively controls Boralex in terms of when they might start paying a dividend. Could this be 2 years away? Could it be 3 years away? For now, they're reinvesting all the cash flow, and that may actually be a good decision for the next 2 years.
All right, Peter, always a pleasure.
Thank you.
Peter Puccetti, Chair and Chief Investment Officer at Goodwood. Time now to zip around the globe for our World Wrap. Another Saab story, a deal to save foundering Saab automobile